Welcome to Real Estate Radio Live, an informative and engaging hour discussing everything you need to know about the world of real estate. Your host, Joe Kuchera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Kuchera.
Welcome in. Good afternoon. Joe Kuchera with Real Estate Radio Live. Thank you so much for spending some time with us this afternoon as we check in and roll our way through the week. Just a couple more days. Thanks again for spending time corresponding, emailing, calling. We have a lot of response back and forth. It's great to see. We had a lot of activity on the show yesterday, a lot of texts, a lot of emails, and a couple calls, so keep them coming. Just a reminder before we get started on our topic today, we're with you 5 days a week. We're the only 5-day-a-week live real estate show in the entire Bay Area. We're proud of that. We continue the trend here, almost 8 years on air, which is important, although the dynamics are changing. Most of you know a lot of people are listening via podcast because it's just easier for time scheduling and convenience. So we get that. That's why the podcast continues to grow at record pace here. So a couple different things you could do. During the show, we're live from 3 to 4 Pacific Daylight Time. You could tune in on your radio, KDOW 1220 AM, to listen that way. You could also tune in online and listen anywhere, even outside the listening area. Our listening area for the live radio portion is the Bay Area for the most part. If you want to listen anywhere else during this time period, you could, if you have the internet connection, just go online, go to kdow.biz, and click on the big sign there that says Listen Live, and you can listen to the show anywhere during this time frame online. Also, the podcast, if you want to download the podcast, we'd love to have you follow the show, and that you could go to iTunes or any of the usual places to get the podcast and just type in Real Estate Radio Live. Download the podcast. You could do that from our website at reradiolive.com. Again, that's reradiolive.com. A couple things during the show. If you want to get your calls on the air, 1-800-516-1220 is the way to get the calls on the air during the live portion of the show. During the show, you could also text those questions, 408-838-9060. And if you're listening to this via the podcast, then the best way to reach me is 408-838-9060. Of course, you could always go to the website and email and contact me that way. All right, today's topic is going to be mortgage lending. A little specifically, though, most of you might say, oh, my God, mortgage lending. It's the most boring thing I've ever heard in my life. Well, unfortunately, it's still a great need. Most of us need to borrow money, and it is a good thing. It is tax deductible on the interest side, if, of course, you're talking about your primary residence. But a little bit more into detail today. I want to talk a little bit more about not necessarily mortgage lending as much as how do you differentiate, and this comes up a lot. I get this question a lot. So I really, every once in a while, I like to bring this up and just spend a little time talking about it. What is the difference? We get this question all the time. What is the difference, Joe, between a major publicly traded bank, right, like it's like a Wells Fargo, a Chase, a Citibank, someone like that, versus a major mortgage banking operation like the one I'm with, New American Funding. There's several others that are large, what's called mortgage banking operations. So big banks like ours, but it's not a publicly traded bank. And even though we fund under our own name, a lot of the jumbo stuff we fund under and sell to the investor right away. So there's some differences there. And then you have the mortgage broker who are making a bit of a comeback. Honestly, there's a few more mortgage brokers these days. Back in the, I would say the late 80s, 90s, and even into the, the early 2000s, a lot of mortgage brokers. And then when we experienced the mortgage meltdown, unfortunately, because of the compliance regulations, a lot of things that governed kind of the way you navigated, right or wrong, the mortgage brokers, they took it on the chin pretty hard. The mortgage brokers took a bad rap for the mortgage meltdown, which I think is completely unfair. I've done all. I've been experienced with all. And so I'm going to go through those today, a little bit of the difference. What is the difference between a major publicly traded bank like a Wells Fargo, a Chase, a Citibank versus a big mortgage banking operation versus a broker? And just real quickly, brokers, again, are making a bit of a comeback. I think they're adding, as we see that, there used to be a bunch, and then they almost completely went away, again, because it was really difficult to navigate being a broker, and there's some reasons why. They made it a lot more difficult to be a mortgage broker in this business. Again, whether that's right or wrong, fair, I'm not sure, but it is the way it is. So I'm going to go through those, talk a little bit about those. If anybody has any questions, again, check in 1-800-516-1220, 1-800-516-1220. The reason why, obviously, financing is so important is that's what most people do when they buy a house, of course, or refinance or get a property. You need financing for the most part. Some people don't. If you're one of those fortunate ones that don't need financing and you own everything free and clear, that's wonderful. But most people do carry a mortgage for a period of time. And so it's important to educate you on kind of not to be, I'll say this a lot, it's our goal here, my objective here is not to have you, the consumer, be an expert. Now, some of you love being an expert in certain areas. That's fine, but I find that most people are an expert in what they do in their business, their occupation, their career. So it's not necessarily they want to be an expert at these things, but they want to have a better understanding. They want to be educated more. They want to have enough information where they can make educated decisions. And even more important, I will say this is the single most important thing about real estate and lending. Educate yourself enough to where you could make the wise choice and decision on who to work with. I would say that's the most important thing to think about or to put yourself in position for in real estate and mortgage. Educate yourself enough so you have enough information to go out and interview and figure out the people that you're going to hire to work for you. Because the people that you hire to work for you are really the most important component. And the reason why is they're going to drive decisions, the transaction, the relationship, results or not results, depending on the situation. And so I would say prepare yourself for that. That, I think, is the most important thing. So let's talk a little bit about, let's start with the kind of the major publicly traded banks, just a quick review. Most everybody listening to this show, you're familiar with banks like Wells Fargo, Chase, B of A, Citibank, to name a couple. Those are some of the largest ones. So how do they operate? Well, big operations, big operations. In some cases, they're major diversified holdings as well. Is what I mean by that is, so I believe, if I'm not mistaken, like B of A owns Merrill Lynch. So there's most of these major lenders has a financial services or a financial investment arm to the lending platform. And there's a reason for that, because they could cross-sell and try to get more of the business from every client and try to bundle those services together, I think. And that's the major goal of someone like a Chase, a B of A, and a Wells Fargo. They all have investment arms, too. Like they have, Wells Fargo has, investment advisors. Chase does, I believe, and so does so does B of A, which I think it's Merrill Lynch. And so, of course, they're going to want to try to get everything, all the assets under management, right? They're going to want to get your mortgage. They want to get your credit card, their savings, their checking, and all that. Quite frankly, I'm not a big fan of that. I know some people logically might say, Joe, I love having everything at B of A. I love having everything at Wells Fargo. I think it's dangerous. And the reason why is that the same reason you might not want to put all your money in one stock. And let's look at some of the obvious examples. Look at Wells Fargo in the last couple of years. I mean, tarnished reputation. Big time. They've been under scrutiny and been under heat the last couple of years, and rightfully so. They've made some major mistakes. No different than others at times, different industry. They make major. In this case, Wells Fargo has some serious blemishes out there right now, and they've lost a ton of business. They've lost a lot of business because of some of the things that's taken place, and I'm not going to go over all of them. But the last couple of years, they have been under scrutiny of some really, really questionable business practices and unethical, if we call them, or questionable tactics or operations in the way they have been serving or not serving their customers, and it's not been very good. So if you have everything with a Wells Fargo and something like that happens, is that a good thing? Is that a good thing? Are you uncomfortable? Think about this. If you had all your investments with Wells Fargo and you had your checking and your savings and your credit card and your auto loans, and all of a sudden something like this comes up where there are some really questionable practices, whether there's some ethical issues or whatever it is, are you comfortable having everything under your roof, literally, with one company, and then all of a sudden something like this happens? I think it could be, you might want to have some second thoughts about that. All right, we're going to take the first break. When I come back, I'm going to continue talking about the difference between mortgage lending, major banks, major banking operations, and then the difference between brokers. If you have any questions, 1-800-516-1220, text 408-838-9060. This is Joe Kuchera with Real Estate Radio Live. I'll be back with you in just a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
The world is changing, and so is real estate. It's changing in ways that give consumers more control with more affordable options. So what are your options? Hi, this is Joe Kuchera with Real Estate Radio Live. I've been on the air educating and informing consumers for over 7 years now. I'm excited to announce that there is now a more efficient and cost-effective way to buy and sell real estate. Our team at Real Estate Radio Live is launching a new program designed to help buyers or sellers like you in real estate, lending and title. That's right, we'll coordinate the entire transaction for you. So you benefit by working with the same team, saving time and saving money. We'll guarantee you'll not only be working with the most qualified, hand-picked experts in real estate, lending, and title, but you will also save a significant amount of money in all three services as well. Act now and benefit from changing the world of real estate. Call 408-838-9060. Go to RERadiolive.com. That's RERadiolive.com.
Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Kuchera.
Welcome back in. Thank you for joining me this afternoon. Joe Kuchera with Real Estate Radio Live with you 5 days a week. Again, the only 5-day-a-week live real estate show in the entire Bay Area. Proud of that because we will continue to bring you education and information via the live show and then also the podcast. Be sure to tune in and check in. Let us know what you think. We're live streaming on Facebook every day unless something's going on when we don't have a show. And live on the radio in the entire Bay Area. You could tune in and listen, or you could listen online, either one. During the show, if you'd like to get a hold of us, any questions, 1-800-516-1220. Again, could be about today's topic. Please know that if you want to call, you don't have to call about today's topic. If you want to call and you have a question about anything about real estate, doesn't matter. It could be something that's not about real estate. I don't care. Give me a call, 1-800-516-1220. Or you could text the question 408-838-9060. The topic today is mortgage lending. What's the difference between major bank, publicly traded bank, versus a mortgage banking operation versus a broker? So we're talking a little bit about that. In the first segment, I talked a little bit about the major lenders, major publicly traded banks. That would be a Wells Fargo, a Chase, a Citibank, B of A. So what you're going to get with them, again, they have their own money. Everything's funded in their name. You're going to get when they're underwriting your loan, for instance, when you submit a loan with B of A or Wells Fargo for a mortgage, let's say, they're going to make those decisions based on that particular bank's underwriting guidelines. And believe it or not, sometimes they change. So some lenders can be different. Keep that in mind. But it's their money, so they're going to make those decisions. Now, if it's conforming loans, there's some standardized underwriting guidelines that they go by. Where it gets a little tricky and where I think the benefit comes in is the people, the lenders, the investors that work with jumbo financing. Honestly, ladies and gentlemen, in my opinion, I've been in this business 20 years, done thousands of loans, and I could tell you that if it's a conforming loan amount, $417,000 up to $636 in this area, they're easy. They really are. And what I mean easy is some people might say, well, Joe, but they have asked me all this paperwork and documents, and they're asking questions about deposits and all this. I know that's frustrating. I get it. There's reasons for that we won't go into today. But the truth is, the conforming financing is very simple for the most part on our side, because it's pretty simple underwriting guidelines, and you enter information in, and you W-2 income, you have this much money, you have this much reserves, you have this credit score, these guidelines, and your debt to income's here, and it fits in this box, and if it doesn't fit in the box, it comes out and doesn't work, but if it fits in the box, it's pretty well done. It is. It's fairly simple. Don't let anybody tell you it's not. If they're doing something wrong, if most conforming loans, pretty straightforward. Where the real tricky, frustrating part of this business still lies, and I'm not sure if it's going to change anytime soon. It's changing a little bit, but not much. And that's jumbo financing. So you have to know if you have jumbo financing, which means in this area, in most areas, it's anything over $636,000. Now, jumbo's a different number in different counties, but again, just keep in mind jumbo financing. If you're doing jumbo financing, please, please, please be very careful of who you work with, because it completely changes the dynamics. It really does. It's going to make a difference of who your loan agent or mortgage loan representative it is. That's going to be the first barrier there. You could have the best underwriters in the world, and you could have the best bank in the world and the best lending in the world or the best broker in the world. But on the front line, if you're dealing with the wrong person that's incompetent or doesn't know what they're doing or misleads you or doesn't communicate properly on what they need or don't need, or, that's where most of the trouble starts. It really does. A lot of people will tend to blame it on the underwriters sometimes, but honestly, if we do a good job of preparing that loan, packaging that loan with our team before it goes to the underwriters, you shouldn't have a whole lot of problems. But it's just different. The reason jumbo is different is because there's not a big appetite for the secondary market and investors to buy jumbo loans. There just isn't, and there's not much money in them for banks. Those are a couple of reasons why they're so tough. So the underwriting is very strenuous. A lot of people laugh all the time. They're going, what's next? Blood samples? They're going to take DNA? And it feels that way sometimes because of the stuff they ask for. I understand. So be sure, if you're working on a jumbo financing, that you're working with someone you trust. I can't stress that enough. Most of the other stuff is pretty straightforward. So the difference, you have the Wells Fargo, the Chase, the B of A, so they underwrite to their own money, their own guidelines, pretty straightforward. If you get a decision, you're getting it for them. Let's talk a little bit now about the difference between a major publicly traded bank like that versus someone like New American Funding, who I'm with, and several others that are what there's called large mortgage banking operations. So large mortgage banking operations, that's what New American Funding is. That's what there's several large mortgage banking operations. Like, for instance, our company does roughly about $1 billion a month in volume, loan volume. That would be considered one of the largest mortgage banking operations in the United States. It's a large volume. So what is the difference? No difference at all between us and Wells Fargo, B of A, Chase, when it comes to conforming, government, FHA, all that kind of stuff, no difference at all. For the most part, no difference at all. When you get into the jumbo territory, there's a little bit of the difference, and this is how it changes. I'll give you an idea. So someone like New American Funding, we are big enough, and we have enough financial backing and wherewithal and experience and reputation. So we underwrite our jumbo loans. We have what's called delegated underwriting. So even though we have the Chase products, the Wells Fargo products, the B of A products, the different products, Merrill Lynch, Redwood, there's a lot of lenders. You hear the names. So even though we're underwriting to their products and their programs, our underwriters are in-house employees of New American Funding, so we do control those decisions. In other words, when that goes to underwriting, it goes to our underwriters at New American Funding, even though we're underwriting a Chase or Wells product. It may sound a little confusing. The reason why it's a big difference, and most people don't know this because most loan officers are honest sharing. Some lenders, even mortgage bankers like us, they'll say, oh, yeah, we have that product. But what they won't tell you is they're not delegated. In other words, they don't do enough volume for whatever reason. Maybe they don't have the financial backing or whatever it is, or they don't want to. They're not delegated, which means if they take in a loan, and let's say they're saying, oh, yeah, this loan's going to go to Chase, right? So if they've taken a loan for you and they say it's going to go to Chase, and it's ABC Mortgage, ABC Mortgage is going to underwrite that, and then ABC Mortgage then has to send it to Chase, totally separate investor, Chase, to do another complete underwrite on that loan. So you're really looking at double underwriting. You're looking at double turn times, longer times. Decision-making is more challenging, and it's just a tougher situation. And a lot of people won't share that information with you, maybe because they either want to or they think that might make you nervous. I'm not sure why. But these are some of the differences, all right? So I'm going to take another break. When I'm going to come back, I'm going to continue to break it down, some of the differences between the major banks, the major banking operations versus the brokers. This is Joe Kuchera with Real Estate Radio Live. If you have any questions, 1-800-516-1220 or 838-9060. I'll be back with you to continue in just a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
Sadly, tragedies are part of our life. When faced with these tragedies, it's important that we rally together as a community to help those in need. Hi, this is Joe Kuchera, host of Real Estate Radio Live. As a way for our team here at Real Estate Radio Live to give back to our friends and neighbors affected by the tragic North Bay fires, we'll donate a percentage of every loan or every real estate transaction closed between October and December 2017 directly to the fire victims. Considering the average loan amount and real estate transaction amount, we are hoping to donate about $2,500 per transaction. So if you or anyone else you know is in the market to buy or sell, finance a purchase, or simply need a refinance, remember, we'll donate a percentage of our team's commission for each and every transaction. 100% of all the donations will go directly to the fire victims. For more information, please contact us at 408-838-9060 or go to RERadiolive.com.
Real estate broker Cal DRE 413-1002, NMLS 3233.
Hi, this is Joe Kuchera of Real Estate Radio Live. Thanks for tuning into our podcast. We are your go-to resource for all aspects of real estate, including buying, selling, refinancing, building, and legal and tax advice, and much more. You can subscribe to Real Estate Radio Live podcast on iTunes and Stitcher to listen to an engaging discussion about anything and everything real estate. So make sure you get our app, RE Radio Live, in the iTunes store to follow the show. Hi, this is Joe Kuchera, host of Real Estate Radio Live and Bay Area Mortgage Planner. In addition to being your home financing expert, please remember you could always contact me for other trusted advisors such as realtors, financial planners, and CPAs. Please feel free to contact me at 408-838-9060. That's 408-838-9060, or email joe at RERadiolive.com, or visit my website at RERadiolive.com for more details.
Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Kuchera.
Welcome back in. Thank you for joining me this afternoon. Joe Kuchera with Real Estate Radio Live with you 5 days a week, Monday through Friday. If you have any questions during the show, 1-800-516-1220. If you want to text, 408-838-9060. Talking today about understanding lending, mortgage lending. What is the difference between a major publicly traded company, lender like B of A, Wells Fargo, Chase, Citi, versus a large mortgage banking operation, for instance, like the one I'm with, New American Funding, versus then we're going to talk a little bit about a broker. What are those differences? So last segment, I started finishing up talking about the mortgage banking operations, like the one I'm with, the large mortgage banking operations, who have the flexibility, in my opinion, of they have all the horsepower and flexibility of a large major bank, in my opinion. The big difference is we have more flexibility. We're more entrepreneurial. And what do I mean by that? I mean, we could make decisions quicker. We could pick up the phone and talk to people. We don't have to go through a lot of red tape in many cases. We don't have to wait 3 weeks to go up to 3 levels of management for decisions when, it really makes a big difference. It really does when you're not handcuffed with a lot of red tape and a lot of stuff that, companies, and you have to read a manual that's 5 or 6 inches thick that says, okay, when step 1 comes up, don't go to step 2 unless you go to step 3, and then you're going to have to come back to step 2 before you go to step 4. I mean, it's just crazy, some of the steps and some of the things that they put people through in major corporations, because that's the way they're structured, a lot of them. And it's not a right or wrong. It's just the way it is. And if any of you worked for major corporations, you know what I'm talking about. I mean, there's a lot of liability there. So there's just a different makeup. There's a different component to working with a largely traded public company. And actually, and it depends on the company too. There are some publicly traded companies out there that are very flexible and fast-moving and entrepreneurial, and we could go on and on about the different technology companies. But it is a different animal when it comes to lending and any kind of government-regulated industry. It's different. So mortgage banking, again, kind of the quick summarize. We make our own decisions. Typically, like us, we have delegated underwriting, which means we make our own decisions on the investments that we have on jumbo products. So we underwrite to Chase's products, to Wells Fargo's products, a lot of those major lenders that actually have that jumbo. And then we actually will turn around and sell that loan to them or someone else that buys those. We very, very rarely at all keep and service jumbo loans. Someone like us, we do keep a lot of the conforming and government loans. I could tell you that I think last count, I think we're over $12 billion on monthly servicing. We may even be a lot more than that at this point. So we service a lot of loans, and that's one of the differences in a large mortgage banking operation. So then let's talk a little bit about brokers. So brokers, who again, when I started the show, used to actually dominate. If I remember right, back in kind of the heyday of, I would say, the peak of the brokers, I do think, and I think I'm going to get this right. I remember there was a time where with all the lending platforms, brokers represented over 50%, almost 60% of lending. I think it was at its heyday, at its peak. I do think, if I'm not mistaken, I know it was over 50%. Whether it was 55 or close to 60, I don't know. But let's just call it 55. It doesn't matter. That's a huge, huge amount of brokers to represent lending platforms all over the United States. Think about that. I don't know what the number is now. I'd be guessing. I should have knew that before coming on the show today. But I could tell you that back in 2009 and 2010, when everything fell apart and it really didn't make financial sense for most people to be brokers anymore, and unfortunately, right or wrong, unfairly, they went after brokers and made it tough for them. I think it was down to less than 10%. I really do. I want to say it was 7 or 8% of all the lending platforms at one point back in 09, 10, 11. Less than 10% of the business was done by brokers. I don't know what that number is. I know it's up. It's got to be up. I don't know if it's 12%, 15%. I don't have any idea. I'll double check on that, and I could follow up on another show. But my point is, they're making a bit of a comeback. So the mortgage broker is kind of, as it mentions, it's a bit like an insurance broker, an auto broker, a furniture broker. Most of you are familiar with that, right? So you go to someone, and for instance, they're at ABC Broker Mortgage. And so they take your information, they build your profile, they look at it, and they say, okay, let's see what investor, let's see what lender best suits this client. So you take the information, you take their loan information, you pull your credit, you do all that stuff, and then they might go look at 12, 15, 20 different investors that might be best suited. Some of them are price sensitive, some of them aren't, some of them maybe it's a unique program. So the broker then goes and shops your loan. And some people, so here's how the broker sells the positive spin. The broker will say, hey, you want to work with a broker because we're not tied to one lender and we could go out and get you the best rate and best terms possible. Well, yes and no. There's some truth to that, and there's some things that aren't very truthful to that. It just depends. That's not always the case. I could tell you let me just tell you this. I could tell you this for sure. So it's true that they do have the opportunity to go out and shop your loan at all these different places. That part is true. What's not true is that they could say that they're going to find you the best rate or best terms or best loan because they're a broker. That is not true. That is absolutely not true. No matter who tells you that, that is not true. They cannot guarantee just because they have 15 or 20 lenders at their disposal that they're going to find you, quote unquote, the best rate or best fees or best program. It's not true. They maybe find one of them. You just don't know. You don't know if that exists. There's so many different lenders and financing options in the United States alone, in the cities and the counties and the states alone. You would never know that. So that is the major difference. The broker, again, will get your information. He or she will then shop your loan out and find out maybe what is the best program or what is the best investor for you. And then they will send it to that investor. So let's say you're working with a broker, ABC Mortgage. They get your file. They get it in the system. They take a look at it. They have what's called a processing team maybe within their company. And then that processor then submits to, let's say they're working with Union Bank. Okay, Union Bank's one of the places they broker to. So then they'll send this loan to Union Bank electronically, or typically these days everything's electronic. So they'll submit this file to Union Bank, a setup team. And then Union Bank's setup team will take a look at that loan, and they'll take usually 2, 3, 4 days to get it what they call set up and make sure all the broker disclosures are signed, everything's done right, the loan estimate is done right. One of the things that clients don't know when you're brokering, and there's more paperwork, first of all. Secondly, it's for the most part always going to take more time. And the reason is you're working with different entities, different companies, and so everybody has their time. So if you submit a loan with us, right? If your loan comes in and I take that loan initially, it goes to my assistant. My assistant gets it set up, and then it goes directly to our processor, and then from there it goes to underwriting, and you're done. So boom, 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 done. Decisions made in underwriting, and that's it. If you're brokering a loan, you're typically going to go, loan officer takes the file, goes to their assistant, right? And then it goes to the processor, and it might even go to the internal. Now, this is with ABC Mortgage. And then it's going to go to the broker, the investor, and they're going to do what's called the setup team. It's going to take a couple of days for them to get to do what they need to do before it even gets to their underwriting. So there's an extra 2 or 3 steps typically when you broker a loan, and that's why typically it takes longer. And the communication typically is a little more difficult because, again, you're dealing with more people, more questions, more answers, more paperwork, and more steps. And it just does. Again, there's no right or wrong. This is just an educational process to let you know how this system works. The other thing a broker does is they take no liability for the most part. They take zero liability on any of these loans because none of them are underwritten, or funding in their names. So if you have ABC Mortgage typically, and even if they're a banking operation, take a look at the paperwork. You might say ABC Mortgage, an affiliate of, Smith Time Mortgage. And so you go, I don't understand. I'm working with ABC Mortgage. Why is it Smith Time Mortgage now? Well, it's because they're working as a mortgage banker and they're really selling it to them. They're not taking the risk. It gets really tricky and confusing. So one of the things you really need to be careful with when you're working, who you're working with is, especially if it's a time-sensitive issue on a purchase, be very careful of who you're working with because it could get difficult at times. All right, we're going to take the last break, and when I come back, we're going to finish up doing a quick summary. Again, the topic today was discussing the difference between the major banks, publicly traded banks, versus major mortgage bankers versus the broker. Joe Kuchera with Real Estate Radio Live. If you have any questions, one more segment, 408-838-9060. I'll be back with you to continue in just a couple minutes.
For more information on today's program, visit RERadiolive.com. That's RERadiolive.com.
The world is changing, and so is real estate. It's changing in ways that give consumers more control with more affordable options. So what are your options? Hi, this is Joe Kuchera with Real Estate Radio Live. I've been on the air educating and informing consumers for over 7 years now. I'm excited to announce that there is now a more efficient and cost-effective way to buy and sell real estate. Our team at Real Estate Radio Live is launching a new program designed to help buyers or sellers like you in real estate, lending and title. That's right, we'll coordinate the entire transaction for you. So you benefit by working with the same team, saving time and saving money. We'll guarantee you'll not only be working with the most qualified, hand-picked experts in real estate, lending, and title, but you will also save a significant amount of money in all three services as well. Act now and benefit from changing the world of real estate. Call 408-838-9060. Go to RERadiolive.com. That's RERadiolive.com.
Welcome back to Real Estate Radio Live, streaming live on iHeart, TuneIn, and KDOW.biz. For more information on today's topic or guest, just visit RERadiolive.com. That's RERadiolive.com. Again, your host for Real Estate Radio Live, Joe Kuchera.
Welcome back in. Thank you for joining me this afternoon. Joe Kuchera with Real Estate Radio Live. We are in our final segment here, wrapping up Thursday afternoon. If you have any questions, we have just a couple more minutes, 408-838-9060 if you want to text. If you want to call the toll-free number, 1-800-516-1220. Today the topic has been how to compare, how do you differentiate a major bank when it comes to how they operate, what they do, how they look at loans. And that is, the difference. I would say there's three kind of major different players in this. In this industry, you have the major publicly traded banks like a Wells Fargo, Chase, B of A, Citi. Then you have the large mortgage banking operations like ours, independent. And then you have the mortgage broker, who is really just what it says. It's a broker. And they take your loan and then they broker it out. There's really no liability or responsibility on the broker side. They still, of course, have the responsibility and the liability to do what's right, be ethical, follow the guidelines, the compliance. All that stuff doesn't change. The difference is they don't make decisions on the loan, if that makes sense. So a broker does not make decisions on the financing that they're assisting you with, if that makes sense. It's going to a third party. That third party then makes a decision on your financing. So just to be clear, when someone is a mortgage broker, they'll say, this is great. I know the upside. They'll say, this is great. I get to go shop your loan out and get you the best rate, best program, best cost. That's not the truth. That's something they could say. And again, I've done this. I was a broker for 9 or 10 years. I understand it. I understand how it works. I get why that conversation comes up. There is a benefit in some cases to be able to be a broker, to be honest with you. But in this day and age, what's gone on is someone like me, who is a mortgage banker, so we underwrite our own. I mean, 90+% of what we do is in-house, right? However, we also have broker channels. What's that mean? What that means is, let's say for some reason the loan that we take in doesn't fit in the model in which we, most of what we do, everything fits. But there's stuff that comes in that doesn't fit. So we have the ability then to broker that loan out. In other words, you really, in my opinion, now you really do have the best of both worlds, because you cover 90% of the business in-house. You make your own decisions. You do a lot of stuff that with your own name, own underwriting, and get things done quicker, more efficiently. And then if for some reason it doesn't fit in that model, then you could always have the option or the ability to broker that loan out. And I'll tell you the downside, in my opinion, and what I want to talk a little bit about, the major publicly traded lenders. I will tell you the downside to that, to dealing with a B of A, a Wells, a Chase, if they have a problem with your loan, no one else is going to do that loan for you within that company. See, if you bring a loan to me and we can't do it for some reason internally with New American Funding, then I have other sources that could do it. So you're not stuck. If you bring that loan to Wells Fargo, B of A, Chase, or something, they don't have other resources. In other words, Chase, Wells Fargo, B of A, they don't have broker channels. They don't broker loans. If they can't do it, they'll have to give the loan to someone else, like me or someone else that could potentially do that. So that is a disadvantage of the major lenders when it comes to that. It really is. And then you have, again, the mortgage bankers and then the broker channels to kind of round things up. Now, the confusing part, I'll finish up right before we finish here. We just have a couple minutes to go. Is that where this gets even more confusing for the consumer, and I really feel bad for the consumer with this, and it doesn't matter. I mean, there's very educated people out there navigating all this stuff, very educated people. And it's still frustrating and confusing on who you're dealing with when you're filling stuff out online. It is. It's really, really frustrating and confusing. And unfortunately, they still make it that way. And I've talked about this before. I know some people love the idea. You're kind of obsessed or fascinated, maybe is another word, with, I want to do everything online, Joe, everything online. I want to order my groceries, my car, my mortgage, my everything. I'm going to do everything online. Great. I mean, some people just like, you know what? I'm not doing anything the way it used to be. And I understand. Some people just love to do that. Where you have to be careful is there are some areas, I should say, you have to be careful with that. And I do think mortgage and real estate is one you have to be very careful about. You could do a lot of due diligence, research, information, but when you start putting your stuff out there to the universe and not knowing who has it and who it's being sold to, is where I would be concerned, where I'd start being concerned. And so for those people that say, I want to do everything online, that's fine, but be careful, because in many cases, you could go to a lending tree or a cash call or all these different names of companies that do things, and you don't know whether that information is going to them or it's being sold out to you as a lead or brokered out, or your information is just being sold. And I've heard stories and stories about people filling information out thinking it was a company, and all of a sudden they get 20 calls from different companies, and all of a sudden, unfortunately, the cat's out of the bag. All right, we're going to have to finish up today. Thanks again for joining in. This is Joe Kuchera with Real Estate Radio Live. Remember, for all information, if If you want to contact me or get more information about the podcast or the show, just go to reradiolive.com. That's reradiolive.com. Thanks again. Have a great afternoon. We'll be back with you tomorrow.
You've been listening to Real Estate Radio Live. For more information on today's program, visit reradiolive.com. That's reradiolive.com. Tune in, log in, download our podcast. Discover more at reradiolive.com. reradiolive.com.